Are stocks really as overvalued as everyone fears? Or is the market more resilient than the headlines suggest? Intro. NYU's Aswath Damodaran, known as the Dean of Valuation, breaks down why strong earnings have kept stock valuations afloat despite economic uncertainty and constant warnings of a downturn. Watch to hear Damodaran's candid take on the so-called Magnificent Seven tech stocks, why he still believes in their long-term value, and what investors should focus on to separate real risks from market noise.
Where we are in the market.
Well, it didn't bother me at the start of the year. So if it didn't bother me at the start of the year, at this point in time, I've looked at what it's been able to do, the resilience, and 22 times earnings now might be what this market deserves given that resilience. Maybe that's what we're paying for.
Well, I know, but things are different now than they were at the beginning of the year, obviously, given we didn't have tariffs at the beginning of the year, and we were far more optimistic about the economy and earnings growth than we are today, no?
Notwithstanding all the economic and the news story talk, the earnings don't reflect any of those fears we've held, right? We've talked a lot about the things we should be afraid of. And I would say since 2022, that's what we've tended to do. We've talked about things that bother us, but surprisingly, earnings and stock prices seem to be okay with them. So until they start to show up in earnings, this is, for the most part, more talk than real effects that should affect stock prices. So I agree with you, a lot more worries, but those worries are not showing up at the earnings.
Well, some say it's just a matter of time that, given the tariffs and earnings, it's not like I give it to you, the last quarter's earnings were obviously better than many people had anticipated, but it's not like they were knock it out of the park. I mean, the expectation is that in the coming quarters, that's when you're going to start seeing the potential lag effect show up. So you try and think of the valuation now relative to future earnings, not today.
And maybe the lack of credibility on the part of people who keep warning us this is going to happen is why the market's holding off. Maybe the market's saying, let's see if in fact we see this effect on earnings, because I mean, I can only count the number of times since 2020 where we want the next quarter, it's the recession's coming. And I think the market, I mean, it's like the boy who cried wolf. At some point, the market says, maybe these guys have no idea what they're talking about, including me.
Well, no, look, things have been more resilient than many have thought. And your point is well taken. I mean, look, when the Fed started hiking rates, it was recession, recession, recession. It never came. Now it's with the tariffs, recession, recession, recession. It still hasn't come. So I hear you on that. You still own the Mag 5 and a quarter of NVIDIA. The 5 being Apple, Alphabet, Meta, Microsoft, and Amazon. Now, you don't look at the market as a whole because it's hard to look at what the Mag 7 or Mag 5 are from a valuation standpoint relative to the equal weight. Are the Mag 7 overvalued? And if there is one that is, which one is it?
I mean, it's not that. I mean, the only one of the Mag 7 that I sold was Tesla. And I didn't sell it because I thought it was much more overvalued than the rest. It's because I wasn't comfortable with the fact that it had become a political play rather than an electric car play. So I think, to me, that when I look at the Mag 7 and I look at the capacity to you look at the margins that these companies deliver, and they're able to do it on a sustained basis. You're paying for cash flows, but I think you got to be realistic. At this point in time, the Mag 5 that I have are not the ones that are going to deliver 50% returns for me, but they're still at the heart of my portfolio. They deliver the returns. I think of them as mature cash cows at this point. And I think, and I'm paying for them on that basis. Solid, stable cash flows. And I think that's what people should recognize when they invest in them. You're not going to get 20% growth in these companies going forward, no matter what the tales are about AI in these companies.